Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. And do not forget that today is Friday and we will get you Buy Now, Sell Now Pathshala today as well. But before that, let's have a look at what the markets are up to. So Cheryl, a good end to the week, I believe that the markets are preparing them for. And we're just building on to the morning gains right now.
Absolutely. A very good morning to you, Shrishti. If you look at the markets, they hit a fresh record high levels as well in today's trading session. If you look at Nifty Bank, inches away from that record high level for the Nifty Bank as well. So we're crucially waiting for that record high level to come in on the Nifty Bank. But yes, in the last few minutes, you can see the spike that Nifty Bank has actually seen. It's the PSU Bank Index that are actually leading the gains once again in today's trading session. 3 days in a row, you are seeing that PSU Bank Index actually holding the fort. 1% uptick coming in for the PSU Bank Index. Talking about the benchmarks, like Shrishti did mention, gearing up to end the week on a very firm footing. You have Nifty that's firmly above that 20,150 mark. In fact, knocking the doors of 20,200. If you look at the broader markets and what the broader markets are doing at this point in time, because you're seeing Nifty Bank outperform, you have the broader markets holding on to good strength. 0.6% uptick for mid cap, 0.7% uptick coming in for small cap index. Let's take a look at the list of gainers and the losers then. It's the two-wheelers that are actually zooming ahead in trade today. Is Bajaj Auto as well as Hero MotoCorp among the top gainers on the Nifty as we speak, followed by Grasim. Remember, Grasim yesterday announced that they are going to finally enter the paints business, and they gave the brand name also, that was Birla Opus. So on back of that, you have Grasim that's holding on to good gains. Tata Motors, HDFC Bank are the other set of gainers. Talking about the flip side and the losing end of the market, the fact that it is going to gain Grasim, the one that's going to be on the losing end is definitely Asian Paints on back of the increased competition that it is going to see in the paint segment. You have HUL, Power Grid, Tata Steel as well as BPCL among the other set of losers in trade. Talking about the sectoral indices then, and oil and gas is the top sectoral loser along with FMCG and realty, while on the flip side is the auto index, 1.2% uptick, PSU Bank Index as well as IT index holding on to good gains. So that's the way how the markets are looking like today. Shrishti, yes, fresh record high levels coming in for the benchmark indices. All eyes on Nifty Bank now.
Okay, all eyes on Nifty Bank, and let's shift all eyes to Kunal Bothra now because he's joining us live in the studios to take us through today's Buy Now, Sell Now Pathshala. Very good morning, Kunal, and very interesting topic yet again on the screen. So go ahead and take us through that.
Absolutely, Cheryl. Good morning to you, Cheryl, as well as everyone, TT Now, as well as all the viewers. Now, today's topic is again an interesting one because it's something which is not generally present into many of the the textbooks and the classical notes on technical analysis. Something which is by observation indicates that how there has been a counter-attack pattern which generally tends to shape up, or a slow counter-attack pattern which tends to shape up into stock prices, and how it gradually slows down the pace of rally and then gets into a reversal. So we'll see classical examples over here. We'll stick to the index trends in this case or in this set of examples. Now the classical observation is that when a rally gets into a trending mode, there is the first counterattack which gets launched by bears. So imagine a trend which has been very fierce for an asset class where you see a lot of green candles, strong uptrend. All of a sudden you see a bearish pattern for the or a candlestick pattern which gets formed, and that generally acts as a slowdown of a pace for a rally. And what you see post that is even if the index is moving up higher, it actually leads into a distribution phase for the index, and then we see a gradual cool off happening into the stock price. So this is an example which I have set for a counter-attack pattern. So this is the first sign that the momentum is about to slow down and we are getting into that reversal zone for the index. It's like pressing a brake, but you do it gradually so that you can slow down the pace and then get into a U-turn. Now this is the first example over here for Nifty Bank, very recent one. As you can see that the Nifty Bank formed the first, so after a very strong rally, formed the first counter-attack pattern, and then post that you saw the rally topping out for the banking index, even though the Bank Nifty made a new high at that 46,000 mark. This was just in the month of July 2023, two and a half odd months back. And from there we saw the banking index go into a reversal. So again, the first sign that when we see such kind of a counter-attack pattern, we should not be extremely bullish, but we should temper down our expectations for the index. We'll see one more examples, and that's from the another benchmark index, that's Nifty 50. Again, a very strong fierce uptrend going into the index. All of a sudden you see two counter attack patterns or two negative candlestick patterns, and then that generally acts as a a zone where the index space has to slow down and we see a index go into a range or a correction. We saw the next couple of days of rally, but then post that the index went into a stall. It managed to top out at 14,700 mark. This was quite some time back. And then from there we saw almost a 1,000-point correction for the index. So that's the first significance of identifying that whether the pace is about to slow down for the index or whether the pace is going into a rally mode. First interesting pattern, which is counterattack.
Very interesting pattern indeed, Kunal. Last week you actually told us about 3 to a break. Today is the counter attack, and I'm very, very tempted to ask you. Yes, yesterday you did answer that you may not watch a movie this weekend, given the fact that no new movies in the theaters, according to you. Which means that are you practicing counter attack? Which means are you going to play some games on PS5 this weekend?
You never know. Maybe. I think if my kids also allow, then definitely why not? We'll have a ball for time.
No problem, yeah. Kids allow, don't allow, but everyone's up for gaming, isn't it? But counter-attack candlestick pattern is what you've learned today on BNS and Pachala. On that note, we'll slip into a break on this edition of Buy Now, Sell Now. Stay tuned. We'll come back with queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that you will see shortly on your screen. Do remember to write your name, the stock that you're looking to invest in. If you're already invested in a stock, do mention the buy price, the quantity, the time horizon. In that way, our experts will be able to help you better. And talking about our experts, today we have Kunal Bothra joining us on the show. And along with Kunal, we have Avinash Gorakshekar also joining. Very good morning to you, Avinash, as well as Kunal once again. Thank you so much for joining us on ET Now. And let me kickstart with the first query that I actually have right now. And the first query that is coming in from, this one is from Carol. And Carol is thanking you, Kunal, for recommendation on J&K Bank. She had purchased about 73 at the price of 73 rupees per share. She wants to know, is there any more scope of upside in J&K Bank? What sort of a target are you envisaging on this particular counter? Also, she also purchased SJVN. She did not mention the buy price, but nevertheless, she wants to know whether she should hold on to it or look to exit.
So I think for J&K Bank, yes, that was a recommendation which I had given much earlier. It's now moved up quite well. In fact, in the last 2 or 3 days, the stock had shown a breakout, but then it's not shown a follow-through up move, neither it's shown a reversal, which means that there could be a bigger move which could be pending for J&K Bank. So I would particularly be bullish on the stock, and my sense is that over the near term, I would probably place a target of 120 odd for J&K Bank, and depending on how the market shapes up and the overall trends for the PSU banking shapes up, we can keep on revising the targets on the upside as well as trading the stop loss. So that could be a better strategy for J&K Bank. For SJVN, I think even a couple of days back I had mentioned that possibly the stock has entered into the overbought territory. So if you've bought earlier for SJVN, I think this could actually be a reasonable time to try and book partial profits or at least full profits for SJVN, because if the stock gets into a stall or even a pause, you could probably expect the stock to correct and maybe come back below the 70 mark. So I would suggest a book profit.
Okay, Kunal, once again coming to you because Matthew wants to know the short-term targets on 2 counters. Firstly, he is having Havells. He 200 shares near to that current market price at 1400 levels, and he also entered into Granules India, 50 shares at a price of 302 rupees. For Granules, good to go and book profits at this point in time. And what about Havells? He is looking for short-term targets.
So Havells, I think I would recommend to hold on, because after this rally till 1450 for Havells, the stock had seen a correction come back towards 1390 mark, and now is seeing a marginal pause of the sell-off, which means that the stock should be into a trending mode, and I would expect the stock to actually move up significantly higher above the 1450 mark. So if it's a short-term play, then you can keep maybe 1450 as a target for Havells, and then if you want to extend it higher in terms of time frame, then I think the targets could be revised much higher for Havells. For Granules, I think this could be a good time to book out profits.
All right, the next one is coming in from Mr. Singh. He's writing to us from Pune, and this one is for you, Avinash. Though he is asking only for 1 year view, but he wants a fundamental take on ThyroCare. What should he do with this particular counter? I'm unsure if he's already holding on to ThyroCare, and if he is holding, what should be the strategy? If he's not holding, then what should be the strategy?
Yeah, good morning, Cheryl. First of all, ThyroCare, has been taken over by Pharma Easy, and clearly, I think, ever since its takeover, I mean, a lot of things have happened. The medical diagnostic market has become extremely competitive, and I think we have seen a larger number of players like Tata's and many new entrants who have entered this market. Now, going forward, the opportunity for growth over the next, say, 2 to 3 years is quite promising because India is still largely dominated by a lot of unorganized players. And I think with the entry of organized players, not only quality but pricing has also benefited the customers. So, as far as Thyrocare is concerned, I would suggest, if the investor has a 2 year view, then only I think he should think of investing. The price has come down to a very attractive level. Growth prospects remain quite promising, but one should also understand that it's going to be a lot of competitive pressure in the next 12 to 15 months. There is a lot of undercutting happening in this space. So even from a longer term perspective, I think a lot of value can be added. In the near term, I think there would be some challenges in terms of margin pressure. So, that aspect the investor has to keep in mind. But if he can hold on for 2 years and more, I think the risk reward could be definitely be quite attractive.
Okay, moving on. And Avinash, the next query is coming from Ashish from Mumbai, and he wants to invest in 2 counters and wants your advice whether or not he can go ahead and put in money for the next 12 to 18 months. He's looking for advice in Vascon Engineers as well as HCC. How both of these counters looking like to you?
Yeah, I think as far as Vascon is looking, Shristi, I think it looks quite promising. They have a large presence in the real estate market. In fact, it's a Pune-based company, and my sense is that a lot of revenue growth would flow in FY24 and 25. The company is also lowly leveraged, so I think that also adds a little bit of shield to the company's financials. So I think at current levels of 56, he could definitely look at buying the stock. I would believe that over the next, say, 12 to 15 months, a price target of at least 75, 80 looks very much possible. As far as HCC is concerned, I think, the stock has run up quite sharply. There's been a major restructuring in the company's, financial book. And I think that has definitely given a new life for this stock, which earlier, it was a penny stock. My sense is that if the stock comes down to, say, around 21, 22 odd level, then it could be a good level to accumulate. Again, from a longer term point of view, because I think the order book and the execution, record of HCC is pretty promising. And I would believe that 2022 would be a good entry point for a reasonably good risk reward for the investor.
All right, the next one is coming in from Mr. K. Parthasarthi. He's writing to us from Chennai. Kunal, he's a senior citizen and he's actually invested into the OMC. 75 shares of BPCL at 475, 75 shares of HPCL about 290 rupees per share, and 500 shares of IOC that he's purchased at 82 rupees per share. As we can see on your screens that most of these counters are actually HPCL and BPCL are way below his buy price. What should his strategy be right now? Should he stay put with all three of them or exit some of them? Or what's your strategy on OMCs coming all together and Target as well?
Yeah, to exit all three of them. I don't sense any rationale for staying on with the stock because there have been multiple times where these stocks have given breakouts, gone into a mild uptrend, but then those uptrends, they are very, very fragile and they last for a very short span of time. We've seen the stock going into sharp phases of correction on a regular basis. So that's generally not a good sign. And when you look at it broadly over the last 3 years, 5 years, even the last 7 or 8 years, these stocks have not done anything significant as compared to many of the other PSU stocks, which have been looking very attractive. So I would suggest to move out from the space entirely and shift on to another PSU pocket or another pocket from the PSU space, and that could be the PSU banking stocks and something which we've been discussing earlier as well.
Okay, moving on, and Avinash, what's your take on TVS Supply Chain, a recently listed counter? And we also saw the results, not that great this time around, but Raja wants to know how is this looking for a medium-term buy?
Yeah, I think, Shristi, one thing is very clear, the promoter background and parentage is extremely solid here. Supply logistic is a very large market and TVS Supply Chain is definitely a well-prominent player. But I think in terms of profitability, probably the investor will have to wait for at least the next 12 to 15 months. The company is yet loss-making and near-term triggers are not visible in the stock. So I would believe that if the investor has a 12 to 18-month horizon, he can continue to hold. I don't presume there could be some big selling pressure, but on the upside and on any kind of re-rating to happen, I think the markets would look at the earnings trajectory to get into positive territory. So I think till then, I think he can hold on. Good long-term prospects, but in the near term, I think it would remain in a very close range.
This one is coming from Nagaraj. He is writing to us from Bangalore. Kunal, this one is for you. He's saying that He's taken option position in September series in Reliance Industries. The strike rate for 2440 call is 59. What should he actually do with this particular counter right now is what he's asking you.
See, just hold on to it as of now, but I don't see any major, rationale for picking up picking up the stock, and specifically in terms of option trade, because the stock is not showing any major signs of a pickup of price action, neither a breakout, neither it's on the verge of a breakout. So, the rationale is something which I think has to be looked into. But in terms of option trade, the current price is around 50 for the option, if I'm not wrong. You can maybe keep a 3-day low, 3-day swing low as a stop loss. That would be, I think, around 37 for the call option. That was the low the option had made 2 or 3 days back. So keep that as a stop loss and continue to hold on.
Okay, Avinash, the next query is from R. Ganesh from Bangalore, and he's been holding two large cap names. Firstly is 25 shares of Tata Elxsi at a price of 925, and he's also holding 25 shares of Polyplex from a price of 2200 rupees. Wants to have your advice whether to hold on to these counters or make a switch to any other name.
I think as far as Tata Elxsi is concerned, I think he's got a very good margin of safety, a very good entry level price. My only suggestion is that in these kind of volatile markets, history, I think he should at least take out his capital and make the remaining shares free of cost, so that he enjoys obviously the capital appreciation as he goes forward. Tata Elxsi is a very differentiated player, and it's not like a regular IT services company. So I think growth prospects remain quite encouraging. So he can continue to hold after booking some profits. And which was the other company you said?
The other company was Polyplex. He was holding the shares from a price of 2200 rupees.
I think Polyplex, I suggest, probably I think, at this level, it's very difficult for him to make money in the near term. So here, I think he can probably look at a switch. I think a better positioning would be a capital goods company called Cummins. I think Cummins looks very promising. And I think the next 2 years, looking at the kind of export market, domestic market, I think this could be a good kind of value buy as well as a growth stock for him. And I think even the current level looks pretty attractive. So I think a switch from Polyplex to Cummins would definitely give him a decent risk reward. And he should actually buy it at the current levels for a reasonable risk reward over the next, say, 12, 15 months.
It's coming from Rohit. He's a long-term investor, but he wants to know whether it's right time to buy Indian hotels right now. Kunal, also UK in India. I don't know if you tracked this one. 900 shares at 1,000 rupees. What should he do?
Well, it may not be a great time to buy Indian hotels because the stock has run up exceedingly high. So remember that the buffer which you typically want when you're looking to invest into such kind of names generally goes out when you buy these stocks at the height or at a extreme height in terms of the rally or in terms of trends. You have to wait out for a corrective phase. So like for example, last month or so, in the month of August, if I'm not wrong, Indian hotels had come back towards 370 or 375 levels. That was a good zone to try and chip into this name. So wait out for at least a 10% correction into the stock. That would help you, keep buffer into names for the stock. And the second stock which you mentioned, I don't track that.
Okay, moving on then. And Avinash, the next query is from Ajish from Kerala. He's writing to us for the first time, and what he's saying is that he's doing SIP in Tata Investment Corporation for rupees 10,000 per month basis. So what's your advice? Is this a good strategy to go ahead with? He's a long-term investor.
First of all, Shristi, Tata Investment Corporation is a holding company of the Tatas. All the group companies which are run by the Tata Group are actually controlled by this holding company. Now, normally holding companies trade at a discount of at least 20% of the market value of their investments, because primarily holding companies, they generate their income only via dividends. They are not manufacturing companies, so the market obviously does not give them a high P multiple. Of late, there have been some news in the market that possibly, companies which have holding companies which have stakes in other companies can obviously also have direct equity shareholding in the parent company. So I think that could obviously be a little bit of trigger. But if he's making an SIP, I think he needs to give in a time frame of at least 2 to 3 years. This is a quality kind of company, but obviously the profitability of this company would depend on when investments are encashed in the markets. Unless they're not encashed in the market, all the books will display the book value of the investments, and that is not going to re-rate the stock. So I would suggest that it's a good defensive strategy, but I think you should understand one thing, that upside in these kind of companies is also going to be limited.
All right, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries then. And this one is coming in from Ravi. He's writing to us from Bangalore. And he wants to know if it's the right time to switch from LTI Mindtree to Tata Elxsi for the long term. Avinash, or is there any other better IT name that he can look at switching to?
I think, rather than switching to Tata Elxsi, I think TCS at the current level looks pretty attractive. I think from a near term as well as a long term kind of opportunity. See, TCS has got significant, synergy benefits. And I think going forward, looking at the order book plus the traction seen in the US and the European markets, I won't be surprised that the second half of FY24 should be significantly better. So I think if at all he wants to switch from L&T Mindtree, I think TCS seems to be a better bet. Current level offers a reasonable margin of safety and a much better risk reward as compared to Tata Elxsi. So I think even the price is quite attractive. At this level, he can enter here from a time span of at least 12 to 18 months. I think a reasonable risk reward could be favorable for him.
Okay, moving on, and Kunal, the next query is on IOL Chemicals. KB Rao has bought 200 shares from a price of 458 rupees. He's a long-term investor and wishes to stay invested for the next 2 to 3 years. So should he continue to hold on, or maybe look to book out profits in medium term?
I think you can continue to hold on. Stock is looking attractive in terms of the last 6 months or 9 months of the price trends from 2023 lows, and it's come out of a major correction. So from 825 to 300, and from 300 the stock is back to 500 levels. I think you should continue to hold on.
All right, this next one is coming in from Venkataramani. He's writing to us from Bangalore. He's going to talk about a stock that is in news today, Kunal, and that is restaurants brand Asia. Today, you saw 25% equity change hand via block deals. You have a lot of murmurs saying that it could be a partial exit coming in from the promoters in this particular entity. But given the fact that the stock has seen a sharp spike in today's trading session, 112 is the buy price of Venkataramani, 250 shares. Should he add more, or should he hold on to whatever he has for a period of 6 to 12 months?
I think good time to book out profits into the stock, because purely on the charts, 140 was the previous resistance when the stock was trading, I think, in mid 2022, and that could act as a hurdle this time around. In fact, today's high is also closer to 140 odd mark for restaurants brands Asia. So I would probably believe that it's a good time to book out profits.
Okay, Kunal, the next query is on one of your top favorites, that is AB Capital. Indu wants to know that how are you seeing the momentum in this counter for the short to medium term outlook? Because if we see since July, the stock is quite consolidating. So is this consolidation phase expected to continue in the short to medium term?
Well, it's a very interesting chart because, FAG ended the month of June. If you look at the weekly charts, the stock had shown a very strong bullish candle, and I think on that single week candle the stock moved from 174 to 196, 197, and from there the stock has been consolidating. But in this consolidation, the stock has not broken below that candlestick pattern, which itself tells you that this is a time-wise correction for AB Capital, and sooner or later the stock should make a comeback and hopefully cross that 196, 197 mark. So the more the time it takes to consolidate, and assuming if the supports don't break, the better it is for the charts, because the next round could take the stock into a much stronger uptrend. So would be bullish on AB Capital and would expect the stock to move up higher, so you can continue to hold on.
All right, the next query that I have is coming in from Chandrasekharan, writing to us from Chennai. Kunal, one more for you. EKI Energy is the stock, 200 shares at an average price of 755. Should he look to average at current levels or wait? He's saying that he can hold on for one more year. What's your take coming in for EKI Energy? The buy price is pretty high, and actually this particular stock did go through a period of sharp up move, isn't it?
In fact, it's a sharp downtrend. There was a sharp up move in 2021 where the stock moved from 35 rupees odd to I think 3,000, 3,100, and from 3,100 it's come back towards the 355 mark. We typically don't tend to suggest a buy into these kind of names. So if you're asking me, frankly, I would suggest an exit on the stock and move to a formidable large cap or a mid cap name.
All right, that was 2021. That's basically a result of how fast the time flies, because I only remember registering the fact that this stock kept on rising day after day for no reason at all. So yes, that's the call coming in from Kunal, that avoid such counters altogether. Shrishti?
Okay, moving on to the next query then. And Avinash, the next query is on GSFC. Subrata Mukherjee wants to know, is this the right time to buy GSFC? He's looking for a long-term investment.
Yeah, definitely. I think Shristi, GSFC has some unique products like caprolactam, which goes in the tire sector. Plus, they have a large presence in the fertilizer space. They are also a value-added chemical producer, and I think valuations at these level offer a decent level of comfort. My sense is that the current year as well as the coming year should be reasonably good, aided by better prices, and most importantly, expansions have been going through very aggressively. So I think from a 12-month perspective, I think he could look at a target price of around 225, 230. A reasonable valuation is something which offers an attractive comfort at the current level.
This one is coming in from Ramesh Kunal. Aptech is the counter that he's asking his query on. 250 shares at a price of 338 rupees per share. He wants to know what's the future of the stock. In fact, let me take this query to Avinash then. Given the fact that he's asking the future of the counter, then I believe he wants to know what's the growth prospect of it. Fundamentally, do you think this stands a chance to gain some more? Because yes, the current price is below his buy price.
I think from a longer term perspective, Cheryl, this company has a very bright future. They are largely present in the education space, and many HNI investors, like in fact Rakesh Juniwala, have also invested in this company. My sense is that looking at the kind of tailwinds in the education sector in the domestic market as well as global market, Aptech is a very well known brand. They have a lot of business coming in from their franchisee business, and they have been adding on to new educational courses which adds value to the students. So my sense is, you have to give a longer time frame for this stock. Definitely, I think things are improving, and you could see better numbers coming in from the second half of FY24. So I think, despite the fact that the investor is negative in his investment here, I think I would suggest him to keep a slightly longer term position here and continue to hold.
Yeah, Kunal, the next query is from Sana. She's been writing to us for quite some days now, but she has query on two counters. Firstly is Chemplast, 100 shares at a price of 519 rupees, and she also has 20 shares of Dixon Technologies from a price of 5,100 rupees. What does the chart suggest for positional trades to sell or to book out profits, or any targets for both of these counters?
So I'm not sure what exactly you mean by positional trades, because it could probably last for maybe 3-6 months. In many cases, positional trades also last till the time the stock gets into a breakout mode, which I think should be a point of rather a case for both of these names, Chemplast as well as Dixon. Very attractive charts for Dixon specifically. The stock has managed to get into a huge recovery, so almost like a V shape or a slight U shape recovery for Dixon Tech, trying to recover from the sub 3,000 levels, I think 4-5 months back for Dixon Tech. So this means that this recovery should have that second leg of uptrend. What could probably happen is that for the next 2 or 3 months, these stocks can get into a time-wise correction. So if your positional time frame is 2-3 months, then I don't expect any significant upside. But if you expect the time frame to be maybe 6 months, 1 year or more, then I think you should definitely hold on to both of them.
This one is coming from Dr. N. Tamiz Seran. He's a 67-year-old gentleman residing in Bangalore, Kunal. He's purchased Vedanta at an average price of 269.81 rupees per share, around 250 shares of this particular counter. He wants to know what should he do with this one, because he's incurring a loss of approximately 12 to 13% on this one.
Well, I think many a times we've been advocating that Vedanta has been a stock which could be best sold into, because the stock has shown considerable weakness across the various timelines. Whether we look at it over the last 8-10 years from 2010 top of 480, or whether it's a recent top of 440 for Vedanta, that was I think mid of 2022. So across many timeframes, multiple timeframes, the stock has shown weakness. I would suggest an exit. And in fact, there are better names. In fact, I think Tata Steel looks far more better and attractive, poised for a breakout. If you can go into the mid-cap end of the metal commodity names, then I think Hindustan Copper as well as NMDC, both of them are also looking fairly attractive in terms of the charts.
Okay, so that's the take coming in on metal counters. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now and ET Now. Let's continue taking your queries. And this next query that I have is coming from Kailash. He's writing to us from Bangalore. He's a senior citizen. And Avinash, he wants to kind of invest about 25,000 rupees or so in Motherson Sumi. Do you think that at current levels he can do this for the longer term? Do you think it merits a buy right now? Or should he look at some other counter altogether?
No, I think if he has a 2-year view, Cheryl, he can definitely invest. See, this is a company which is positioned very well, not only in the domestic market, but even in the global market. And the group has been very, resourceful in rewarding its shareholders with bonuses and good dividends. And from a longer term perspective, they have a very large clientele base across the US, the Europe, and obviously the Indian market. So I think, if he has a 2-year view, then I think he could definitely do a small SIP, or he could buy in, in bits and pieces here, but keep a time frame of at least 2 years. I think the company's growth potential looks quite promising, but near-term outlook would be, little volatile, considering that Europe is going through a little major challenge. But yes, I think for the next 2 years, if he wants to put his money and get a reasonable risk reward, he can definitely consider this as a good investment.
Next one is coming from Mr. Subbareddy, and he has about 50 shares of Shoppers Stop Kunal at a price of 800 and Adani Wilmar at a price of 400 rupees per share. He's saying he's suffering loss on both of these counters, but he wants to know whether he should add some more of these counters in his portfolio. What sort of a strategy should he adopt?
I would not suggest an add on both of these names, even for Shoppers Stop, because I think the stock has shown signs of a divergence, and that too on extremely low volume. So that could probably be a bit tricky for the stock. And I would actually expect the stock to continue to correct what it has already shown in the last few days. Same is the case with Adani Wilmar. Even that stock has, I think, gone into a correction, made a fresh multi-month swing low at a point when the markets are at a fine fettle. So that's it tells you that the market participants are quite negative on the stock over the near to medium term. So I would suggest an exit on both of them.
All right, this one is coming from a first-time writer to us, and I think his name is Amishi. He's not mentioned his name, or he or she has not mentioned the name. But Avinash wants to know which one. He wants to know which one is a good sector to invest in right now. Is sugar a good sector that he can look to venture into? Also on the pharma space, how are the valuations looking at? Anything that you think strikes in the pharma space for you?
Yeah, I think sugar sector looks quite promising. See, globally, sugar prices have started moving up. The added advantage for sugar companies is that, ethanol prices are also going to go up, looking at the trend in crude oil prices. So I think if he has a 12 to 18-month view, he should bet on the larger players like Balrampur Chini, Adampur Sugar, where I think, both sugar as well as ethanol would significantly contribute to the bottom line. And as far as pharma is concerned, I think, he should stick to the larger players like maybe a Sun Pharma or typically a Lupin. My sense is that these are well-established companies, and I think they have a very good pipeline of new products, new molecules which are going to be launched. So I think Sun Pharma definitely looks promising. If he's got a 12 to 18-month time frame, I think he can even do a small SIP here. But I think stick to the large caps in the pharma space.
The next one is coming in from Chandra, writing to us from Mysore. Kunal, for you, HFCL, 10,000 shares at 65 rupees per share. He's been averaging actually for the last 2 years. Now, should he continue to hold on to HFCL or look to exit and look at some better name, because he's making a profit, isn't it?
Yeah, making a profit. So, there is a catch over here, because I think HFCL is a very high beta stock. Now, provided you are your profile is high risk or not exactly low risk, then I think it makes sense to hold on to HFCL. It's a high beta stock. Now, you've been accumulating, which means that you're trying to position for a breakout for HFCL. The stock has been consolidating for last 2 years, which means it could just be a matter of time, maybe another 6 months or maybe another 9 months before the stock gets into a breakout mode of this 2 years of consolidation broadly. So if you have that kind of a time span as well as risk appetite, I think you should hold on to it for trying to encash major part of the potential breakout which the stock can see going forward.
Okay, one more your way, Kunal. The stock name is ONGC from Shushila Belle, writing to us from Karnataka. Wants to know about ONGC purchase at 185 rupees per share. Wants a short-term target for this one, very close to the current price right now.
Yeah, and I think short-term targets you can probably keep closer to 194, 93 levels for ONGC. This was the previous high in 2022. Or I think 94, 95 was the previous high. So maybe closer to that is where you can keep a target for ONGC on the short-term basis.
All right, this one is coming from Balakrishnan writing to us from Chennai. Avinash, he wants to know about Radico Cathan. Do you think that it's a good buy right now at current price, or for the longer term if the viewer wants to actually stay put with this one? Because Radico Cathan, let's not forget, this one also over the last 2 years has had a spectacular run, isn't it?
I think most of the liquor companies, Cheryl, have been doing well, and I think over the next say 12 to 15 months, I believe they should do well. Normally, whenever the elections comes nearer, I think liquor is one product which sells very strongly. So I think over the next 6 to 8 months, you could expect a very strong volume growth for most of the liquor companies, including Radico Khaitan. My sense is that apart from Radico Khaitan, if the investor wants to have a broad-based portfolio, you could also look at United Spirits. That is also another strong candidate in the liquor space, and I think he can broad-base his risk by investing in both these companies.
All right, this next one that I have is coming in from S. Krishna Kumar, who's writing to us for the first time, and he wants to know about AIA Engineering, Kunal. Worth buying at current price right now?
Well, it's a very low illiquid or a less liquid name. I think less liquid would be a better term for AI engineering, and the stock has been doing exceptionally well over the last decade and more. I remember, I think, tracking the stock in 2012-13 when, I think if I'm not wrong, the stock was around 200 or 300 odd levels, and from there the stock is almost at 3,500 mark. So if you have a long-term time span, then I think AI engineering could be a classic SIP kind of a stock. You can start at current levels, and then at every 10% dip or a 15% dip, you can keep on adding, but your time horizon has to be medium to long term at least.
All right, with that, let's kickstart with the rapid fire then. And the first one is coming from Padma Siva Rao from Bangalore. And this one is for you, Avinash. Jamna Auto, 1,000 shares at 92 rupees per share. He wants to know whether it's a good company to stay put with, or should he look to switch to some other company in the auto space altogether?
I think he can hold on. They are largely connected to the commercial vehicle sector. So I think continue for the next 12 to 18 months.
All right, TP Vinod Kunal wants to know about Global Spirits. Should he look to enter this particular counter, and also what's the good entry price?
Soam Distilleries or United Spirits could be better bets.
All right, this next one is coming in from Sudarshan from Chennai. He wants to know about SAIL. He's already holding at the price of 95. Kunal, what sort of a strategy should he adopt for SAIL?
Hold as of now.
All right, this one is coming in from Lakshmanan, and he's a senior citizen, 73 years plus is his age. He has 279 shares of HDFC Bank. He wants to know, is it worth continuing or partially change and go to Reliance Industries instead of that? Kunal, he's a short-term investor also, he's mentioning.
Undoubtedly, you should hold on to the stock even if you're a short-term investor.
All right, this one is coming in from Siva from Chennai. Can he look to buy SRF, CDSL or APL Apollo? Out of this, which one do you think stands out, Avinash?
I think CDSL looks quite promising. I think if he's got a year and a half kind of time frame, I think CDSL definitely looks promising.
All right, Kunal, HUL, Vivek wants to buy this one for the longer term. Do you think right now is a good time?
I think you should avoid HUL and many of the other FMCG names.
Okay, this next query that I have is coming in from Sundar, writing to us from Chennai. 200 shares of Godrej Consumers. What's the future potential? 960 is the buy price. Avinash?
I think he can continue to hold, and my sense is that if he keeps a 12 to 15 month time frame, then I think a decent risk reward can happen.
Okay, Sudeep Chaudhary has bought PCBL at a price of 165. Kunal, 590 shares. What is the future of this particular counter?
Hold on, Philip Carbon looks attractive at 169. Would expect 180 plus as an immediate target at least.
All right, the next query that I have is coming in from KVS Money. He wants to know about Coal India, 200 shares at 258 rupees per share. Should he continue to hold on to it or look to exit? What's your take, Avinash?
I think he should continue to hold. I think Coal India could be a very strong outperformer over the next 12 to 15.
All right, with that, we come to the end of the rapid fire as well as the queries. Thank you so much, Kunal, as well as Avinash for joining us on the show. Thank you, Kunal, for teaching us something new in BNS and Pathshala. And with that, viewers, we are totally out of time on this edition of Buy Now Sell Now, as well as this week's edition. So goodbye from the entire team, especially our producer, my director, Ravindra. Thank you so much for watching.